Happy New Year out there, folks. This is your skipper here, Darius Dell, to present our Macro Bundle live Q&A session, first one of 2022. Obviously, we got brought back a fan favorite, Imran Lakha, CEO of Options Insight. How you doing today, Imran?
Darius. Thanks for having me, man.
Yeah, no, it's a real pleasure to have you, man. Obviously, you're one of the world's best at what you do, so we really appreciate all your thoughtfulness and insights, particularly in the derivative space. Imran's prepared a sort of brief presentation for you guys with respect to crypto, and I think it's a really interesting, not only to kind of understand the dynamics that are happening in that asset class, but more importantly, I think they have a lot of sort of signaling effect with respect to what's happening broadly as it relates to risk appetite. Obviously, this convergence trade we've been talking about for the past several weeks is really very much on in full force, both within the equity markets, but also within the bond markets, and the credit markets as well. So look into the crypto markets to see if we can glean anything with respect to investors' willingness to chase that and the sustainability and duration of that. So without further delay, let me turn it over to Emra.
Thanks. Yeah, so obviously everyone was a bit balled up into year end in crypto, right? There was definitely a lot of outlandish upside targets. Let's say 80K was probably conservative, 100K plus was what a lot of people were calling for. And, the Santa rally just never happened in crypto. So, I mean, I've got this chart here on Bitcoin, and I was playing for that scenario too. That was certainly what I was setting up for, and I was looking for a move. I was looking for a move up towards 80K. That was kind of my conservative area, and hoping that Ethereum was going to outperform a bit to the upside. And once we broke down like that key level at 53K, once we broke that down violently over that weekend with that big red candle, where you just got a load of liquidations. For me, that I look at Elliott Wave quite a bit in terms of technicals, and for me, that invalidated the Elliott Wave count that was going to see us see that upside target by year end, basically. So once that got invalidated, I was like, okay, well, we're looking at a different kind of picture here. So what could this be? And then you had to zoom out a bit and go back to the sell-off that happened from April, May time last year. That first big drop down to 30K. And that was actually part of a bigger correction. That's the idea, right? So I think Bitcoin, certainly Bitcoin, Ethereum doesn't look quite so bearish, let's say, but Bitcoin seems to be carving out a larger degree correction, of which that move down last summer was an A move. A B move is your bounce to those slight new highs. And then the C leg of that, which is the terminal leg of that correction, is what we're seeing now. And that move down that we saw, that dramatic red candle, was kind of like the midpoint of that dramatic move down. That's the idea, right? So then if that is the case, then you should be expecting some sort of fourth wave bounce, which we've kind of seen, and then some sort of fifth wave move down in this C wave that takes us to 40K. At a push, we could even get to 30K. I don't really think we're going to see that, but somewhere towards that 40K area would be a really nice textbook Elliott wave type setup to say, yes, we've got the complete correction. We've got a three-wave move in that broader, longer-term correction, and we can now stage a meaningful long-term bounce off this, basically, or a long-term next leg higher off this. That's what we're looking for. So that's kind of what I'm seeing. And the fact that we rejected that 52K rally, and you can look at these retracement levels from that sell-off, it like failed at the first one, basically, right? So that is kind of keeping consistent with the idea. The fact that we couldn't participate in the Santa rally, S&P's, eking out those new highs practically daily, and crypto just can't participate, does make it look a bit heavy and does kind of lean itself towards the idea that, yeah, this correction is not quite played out yet, I would say. That's not to say we can't rally, right? I mean, if the S&P goes to 5,000, crypto's probably going to want to move up in sympathy. It's just, I think the big hurdle for it is that 53, 54K area before people get particularly excited.
Yeah.
So that's kind of, the technicals, what I'm seeing. If we then, look at some other bullish signs, so I don't want to get too grizzly bearish on you, right, on crypto. I am still a crypto bull. Through and through. We have seen some quite bullish stuff, right? So you've got the institutional focused custody firms, like the likes of Anchorage and NYDIG and all these guys. They have been raising money like no tomorrow, right? So they raised like 3.5 billion just last year.
Firms do.
So these are the guys who are, you know how institutional adoption, everyone's going on about institutional adoption in crypto, right? People want to hold Bitcoin as part of a macro portfolio and they need to jump through a load of hoops to do it. Well, one of those hoops is having a institutional grade quality custodian to hold your Bitcoin for you.
Gotcha.
Right? You know, it's not like us guys who hold it PA on a random wallet, and if
State Street or the bank,
if we get hacked, we're annoyed, but you know what I mean. It's not, we're not going to have people knocking down our door, right? Whereas you're running billions for people, you got to make sure you don't lose their money, right?
Totally.
So these guys have been raising money like crazy, and the idea being is, you know, if they're going to raise, compared that to 2018, which was the previous record, it's 5x that, right? So these guys clearly see a massive wave of adoption coming. They've probably got people queuing up to give them their money to invest in digital assets, and therefore they are raising money to do it, right? So that's the idea.
Gotcha.
Yeah? And then on the other side of that, on the right-hand side, is just a simple table plot showing the performance last year of all these tokens, right? And you look at Sandbox and Axie are these metaverse tokens. You look at Polygon, Terra, Solana, you know, all these alternative layer ones and layer twos. I mean, we're looking at 10,000% plus. I mean, these returns are astronomical, right? So when you see that, it's not hard to convince people that this stuff might have some upside. So the idea is, whilst you might see, you know, Bitcoin lagging a bit, there's still just a lot of excitement to come, I think, in some of these other alternative areas of crypto, like your other layer ones, right? Your certainly the metaverse stuff, given what Facebook have pivoted towards, right? So I just think you're gonna get a lot more interest flowing into crypto on the back of a year like that. That's the point.
Which is right around the time I became sort of tangentially interested in crypto as an institutional investor. This is very different. The institutional participation in this asset class is, and the technology build out is so much different now in terms of those dynamics relative to where we were in, let's say, 2017, 2018.
Completely. And it's across all different areas, right? NFTs, metaverse, you know, smart contract, DeFi applications, right? In cheaper than what it is in Ethereum, basically, right? So it's just, there's so much going on in the space that, and it's not like all these guys are going to succeed and all these guys are going to survive. No. We know some people are going to get weeded out, but
there's a lot of pets.com in that table, I guess.
Yeah. But the innovation in the space, the brain drain that's going into it, and the number of people I know from traditional finance that are going into crypto or have gone into crypto in the last 5 years, it's unbelievable, right? So
absolutely,
people are taking it very seriously, right? And going all in on it. A lot of people are as well. So interesting to see. So then the other thing is, so like I said, Bitcoin might struggle a bit and might not be the place where there's the story or the excitement that's going to drive us higher and be the catalyst. So then you look to Ethereum, which is your next obvious large cap in the space. And this Ethereum Bitcoin spread is behaving very, very well, to say the least. Where Bitcoin is going down, typically Ethereum is a higher beta version of it.
Yeah.
That's not been the case this time around, right? So you've had this spread breaking out late last year above this key level of 0.08. That's Ethereum price divided by Bitcoin price. It squeezed a bit higher and now it's corrected. And we've seen it bounce off that level that used to be resistance of support. It's a textbook bounce off a support level. So, you know, it makes you think, yes, you could definitely see a move up towards 0.1 in this spread, right? Which is, you know, not bad, right? It's about another 25% outperformance Ethereum versus Bitcoin. Right now, how fast that happens is anyone's guess. But if we do think we're getting some sort of reflation, short-term, you call it a convergence trade, a risk-on move, whatever it is, you could definitely see this chart moving up towards that target, towards 0.09, 0.1 area, which basically means Ethereum is going to out rally by a good 20%, right? And that's a trade that I'm looking at. the way I'm expressing that trade is via optionality, because what's happened is the spread between Ethereum volatility and Bitcoin volatility has come in quite a lot. Ethereum was very expensive relative to Bitcoin in terms of options last year. It's trading a good 20 vol points over, which is significant. And now it's like 5, right? It's come in quite a lot, right? And so that convergence of that vol spread is giving you an opportunity to get into these trades where you can buy calls on Ethereum, sell calls on Bitcoin. If nothing happens, you don't lose a lot of premium depending on what size you did on each option. If you didn't net spend too much, I would still recommend spending a little bit just to cover yourself. Don't just go crazy and sell loads of Bitcoin options to fund it all, because then you might get a bit of an imbalance in those deltas, and you get in trouble if Bitcoin has a bit of a sharp up day, for let's say, or whatever. But the idea being is you do spend a little bit, you spend less. Your carry is managed much better than just buying outright calls. If the whole space sells off, you're not going to care too much. And if the whole space rallies, provided Ethereum has the beta, which I think is quite a high probability from what I'm seeing, because you've got potential ETF coming, you've got Ethereum 2.0 optimism that may kick in towards March, let's say. You've got a few things that kind of help that narrative for Ethereum that Bitcoin has already kind of seen play out late last year. Then you might get that move, right? So that's something I'm definitely starting to nibble at and scale into as a position of my own book, basically. Yeah. And the next slide is talking about on-chain. So this is something Glassnode do amazingly well. They put out videos weekly. I always check them out to see what they're saying, see what I can get from that information. Really, in a nutshell, the main takeaway I saw this week was the illiquid supply of Bitcoin is at very high levels, right? It's at levels that we haven't reached since last April. Okay, so that's saying that the illiquid supply is basically people who don't move their coins around, right? So it's people who either haven't touched their coins for like over a year, or it's people like where only 25% of the amount of coins in that account are moving around, right? They hodl most of it, basically. That's the idea. So they can monitor that with on-chain metrics, right? So they have this metric, illiquid supply, and you can see that's growing. So all that's basically saying is that the guys, as we're getting this consolidation move in Bitcoin, the stronger hands who just don't plan on doing much with their Bitcoin and want to hold it for a long period of time, those are the guys who are taking on this Bitcoin, right? And the guys who are shorter term trading it, they're the guys who are letting it go, basically, right? So that's what we're seeing. So a move towards stronger hands, which tends to be not a bad sign for a longer term perspective. And then the chart on the right is just showing the short term holders who are still in Bitcoin from the on-chain metrics. These guys are slightly in the red, right? They obviously bought it when it was a bit higher in the 60K area. They're in the red, but they're not deeply in the red, right? And when we've seen previous bottoms in a bear move in 2018, 19, 21, the amount of pain that these short-term holders were taking was a lot more than what they're taking right now. So that's signaling that these short-term guys, whilst they're in the red, they haven't been fully flushed out yet, basically, right?
These charts are very juxtaposed for a reason, because one's obviously a bullish narrative. The second, it would imply you got some more downside, some more pain to come.
Yeah, but I'd say they're telling you different duration things, right?
Yeah.
One of them's telling you that there's definitely a risk of more pain in the short term for these short-term holders, and in previous flush out moves, they have experienced a lot more pain than we've seen them experience yet.
Yep.
But for the long-term view, we're seeing the right things in terms of who the coins are moving to, basically, right? So when you get that flush out move, let's say to 40K, 30K, whatever, you shouldn't be surprised to see it, but it should make you feel confident that now is the time to step in and hold this stuff for a couple of years, because it's in strong hands now. Right?
Yeah.
That's the idea. Yeah.
Gotcha. that 76 go to 95 or 85, I guess, something like that.
Yeah, and you want to see the short-term P&L go down towards those lower levels. And you're like, okay, that's the kind of flush out that I can get excited about, basically, right?
Gotcha.
Yeah.
It's actually interesting.
If we get that alongside a deflation type move in risk assets later in the year, that'd be quite nice to see, right? And that's when we can lick our lips and allocate some serious money back into crypto. Okay, so then the next thing to talk about is volatility. So I kind of already mentioned the convergence between Ethereum and Bitcoin Vault, but if you look at the two, these are the term structures of Bitcoin on the left and Ethereum on the right. So it just plots the implied vol across the different maturities and what it's done over the last couple of weeks, right? So the blue dotted line is 2 weeks ago, and the pink line is now. Yeah. So you've seen Bitcoin obviously collapse, Bitcoin vols collapse. The whole curve has just shifted down, right? And Ethereum, same story, but in even a more spectacular fashion, basically, right? It's really, really, and you can see the back end, like the March stuff that was trading very expensive, because that curve was even steeper in Ethereum. Because that curve was so steep, it just couldn't hold it any longer, and it started to collapse. So actually, it's not as steep as it was because that back end has really compressed very, very hard.
Yeah,
right?
totally.
And another way of seeing this across different tenors is this is just Bitcoin. Each line represents the time series of the rolling at the money vol for Bitcoin. And you can see this goes back to like a whole year. And you can see the levels that we're seeing on every single colored line are breaking through support levels that we saw last summer, basically, right? So these are implied levels we have not seen since early last year, basically, right? That's how much they're hitting this vol in crypto.
It's interesting you say this because our back test analysis shows that Bitcoin crypto as an asset class broadly, it's positively correlated to its volatility, meaning that price tends to go up when volatility tends to rise when the price is appreciation and vice versa. So this is obviously confirming a lot of the negativity we've seen in recent months, but also the one thing I'd say that's positive, just eyeballing the chart, we're kind of at sort of a support, at least for the pink line, in terms of what's the kind of the low, at least over the last few corrections, not that one there, but that hasn't really broken below that, at least not since going back to Q1 of last year. This is 1 year, right?
Yeah, this goes back. So this chart goes all the way back to December last year, right? So, or December 20, basically. So that real bottom in short-term vol, the pink line is the 1 week volatility, right? So the bottom in 1 week volatility is actually below 40, right? Right now, 1 week volatility is around 60.
Gotcha.
So it's still got 20 vols to go, right, before it gets.
If it breaks below, where it is now, it's going to 40.
But it's really the white line that you need to be the longer dated vol that you want to look at, right?
Oh, gotcha.
That is collapsing hard, right? That has been very well supported throughout the whole of the second half of last year, and it's just smashed through, right? And that leads me on to the next slide, which probably explains why we're seeing that, right? And that's the rise of the DOVs. And for those who don't know what DOVs are, decentralized options vaults, right? So just like everything in crypto, they want a decentralized version of it. So whereas most of the options volume in crypto trades on Deribit, 90% of it, that is still a centralized place. It's a centralized exchange where you put your stuff, even though it's crypto, but it's centralized. Okay. So you got a lot of people in crypto who say, well, that's no good. That's not with the ethos of crypto. I want a decentralized options trade, right? So what these vaults allow you to do is they allow you to stick your crypto in the vault, and the protocol is designed to sell call options for you, to call overwrite against your holdings, right? And obviously a very popular strategy for anyone who's just kind of long only and wants to enhance their yield. The kind of yields you can get are spectacular, right? Because vols are so high in these things. So you can stick altcoins like Solana into these vaults. And the vol that Solana trades on is like 150 implied vol, which is insane, right? So the kind of premium you can pick up selling calls every month or 2 months or 3 months, whatever it is, the maturity they choose, is so astronomical that the returns that you're being offered on these vaults are amazing, right? So you've got various guys. Ribbon Finance is a big one. And this is stuff that I haven't done myself, but I'm planning to look into in more detail this year. But the rise of these, you look at the explosion in volume, like back half of last year from November to December. I mean, that's a pretty steep trajectory that it's moved to. And so what has happened? Effectively, people have parked a load of crypto into these vaults. The guys on the other side of this trade are the ones who are buying these call options. Okay. That supplies these guys with a load of gamma on the altcoin in question. Let's call it Solana. And if Solana stops moving, you've got a bit of a theta problem on your hands, right? So whilst Solana's winging around like an animal, like it was earlier in the year, being long gamma on it is a dream, right? It's a dream. Being short the calls is fine for the guys who've locked it up because they're still making their money being long. They're just getting tapped out at some point. And the guy who's long the optionality is living the dream, right? But when you go into December or late December where the market chills out for 2 weeks and does nothing, you're still paying theta on 150 volt for 2 weeks, right? And you've got to manage that theta bleed. And there's no Solana options liquidity that's being offered to you. So what you're going to do? You're going to sell the stuff that you can sell. So you're going to sell Bitcoin vol. You're going to sell Ether. You're going to especially sell Ether vol because it's trading 20 vols. It was trading 20 vols above Bitcoin. So you get way more theta for it. And it's probably more correlated to your DeFi tokens anyway, or your Solanas or whatever it is. So that's really helped compress those vols down, that supply that's come from people parking a load of money into this stuff.
It's interesting you say that. The last time I've heard of something like this reminds me of the financial crisis. Go back to this is when sort of Lehman went bankrupt. You had the credit spreads and the highest in investment grade credit spreads, even the sort of AAA blew out much wider than your triple Bs, triple Cs, and the reason for that, and much obviously wider than mortgage-backed securities and CLOs, is because people couldn't get out of that stuff, and so they started mass liquidating, kind of their the more liquid parts of their where they had the liquidity, and so that's really interesting that we're seeing that. Clearly, that was not a bullish signal. Obviously, we didn't bottom until March of 2009, but this is definitely something to pay attention to because, these are the kinds of behavioral dynamics that you tend to see towards the end of a market cycle, not at the beginning. Obviously, we're not at the beginning, but, to me, this sounds a little more bearish than I think the broader message.
Yeah, yes and no, right? Because remember, what is this flow in the DOVs actually? It's a bullish flow, right? It's not it's not people piling tens or hundreds of millions into locking up this money into these vaults. Is crypto bullish, really? They're saying,
it's too bullish, is what I'm saying.
Okay, okay, maybe, it's too bullish, but I don't know. I feel like it's just beginning, right? It's an innovation, right? It's you know what crypto's like. It's so exponential that it looks like a steep curve, and then you project 6 months later, and that steep curve looks like the flat part again. Right? So who knows what the volume? I think the volumes have still got a lot of room to go. I mean, think about it. People like me who've been in options for ages, got into crypto options 2 years ago. I've never even looked at these vaults until I've only really started talking about them about a month or two ago.
Wow.
And now I'm going to have a look at them myself. I'm going to decide whether I want to get involved with them. So I think there's still a lot more people who don't even know what they are. So it's hard to call an end to that cycle when not enough people know what the option vaults even are.
Gotcha. That makes sense.
Yeah. Okay. And then the other thing is skew, right? So obviously something I look very closely at within crypto because I find it's quite informative, and it moves around a lot, right? Whereas skew in equities is pretty stable, right? It moves, but it's pretty stable, right? It's always for puts. It's always going to be for puts. It's never going to suddenly invert, okay?
Yeah.
Crypto inverts every few months. Like it just goes all over the shop, right? And that's because it's very sentiment driven, and people just like to pile into the out of the monies in whichever direction they're fancying at the moment, basically, right? That seems to be. So we had puts certainly earlier in December. There was a bit of nervousness. We saw that big move down. It was a bit more of a bias towards puts, people needing to protect, thinking we might have legs to the downside. As we've kind of been consolidating and we've kind of gone nowhere, that demand for puts, which is, you see the pink line is weeklies, that demand for puts has faded to the point where it flipped to calls over New Year and is now back to about neutral. But even if you look at all of these lines trending back up, that just means that the premium is shifting back from puts towards calls. And the reason why that makes sense is because as vol is compressing across the entire curve, you don't need to expose yourself and be long loads of outright Bitcoin. You can just buy some calls instead, right? So that it makes sense that you can kind of stock replace, or let's call it coin replace, into calls or call spreads, because the vol is much more affordable now, basically, right? And that's why I think we're seeing that shift towards upside.
Gotcha. That makes sense.
Yeah. Even though we've seen a supply of upside coming from these option vaults, it's interesting that despite we've seen a supply of upside, vols come down, but calls have actually marginally gone up still, right? So there must be people switching out, de-risking and not taking too much outright exposure and saying, I can just own a load of calls to still be long, and it's safer because we might have more downside to come in the short term, basically. Yeah. And then my last slide is really something I keep an eye on a lot. And all these charts are coming from Genesis Volatility. They've got a fantastic app which I use for all the vol analytics that I do. I do these weekly crypto insight videos where I run through all these metrics and give you my insight, what I've gauged from it, and if I'm doing any trades on the back of it. This is called the Block Sniffer. This just it's quite a funny name. But basically, it looks at all the big clips that are going through in crypto on something called Paradigm, which is like a block trading GUI, which basically people pre-arrange trades. They quote request trades. The market makers who are signed up provide liquidity, and then they trade. And it's for the big blocks that go, the institutional size clips in options, basically. And so you get to see what they're doing. And on the right-hand side, you've got the pie chart showing the calls versus put volume, so very much dominated by calls. Ethereum's the bottom one, so 90% Ethereum calls dominating the flow, 75% Bitcoin calls dominating the flow. If you look at the color coding, you can see the expiries that are trading. My main takeaway would be you've got a lot of pink. You got the 7th of January pink, which is short dated calls, people punting for some short-term upside because the vol's been extremely hit hard into the 60s. People are just trying to get some leverage to an upside in the first couple of weeks of the year, or the first week of the year even. So there was a bit of call flow there. And then you've got end of January, more pink stuff as well. People doing calls and call spreads. So that's kind of, for me, those are the things people are using Bitcoin options for at the moment, to play calls and call spreads in the January expiries. If you then look at the Ethereum histogram, you can see that the massive clips are in June 22, right? And this is the flow over the last 2 weeks. And all that says, and I checked this out in a bit more detail, and this actually was a call ratio trade, a call spread, but a call spread ratio that was done in monster size, in like 30,000 by 60,000, which is like $300 million notional if we got up there, which is pretty lumpy. And that's what that has dominated the volume in Ethereum calls in the last 2 weeks, basically. But people basically learning from their mistake that they made last September or October, where they bought a load of March upside in Ethereum, thinking that was a great way to get leverage to a rally. The rally never came, and their premium evaporated pretty damn fast. They're now doing the similar trade, but realizing that call spreads are probably a better way to go, and they're extending that maturity out to June, basically.
That makes sense. Yeah, man. So this is appreciate this is very detailed analysis. We obviously appreciate it. Broadening it out, or actually got a couple questions for you in the queue already. Jack's asking, will we see a reflation blow off top in crypto, given what Jim Carson said about the two sumos? If it happens in stocks, why wouldn't it happen in crypto?
Yeah, no, I think it may well happen in crypto. I just think that right now the price action in crypto is lagging, and that's because I think the technical breakdown has made the people a bit nervous and cautious about it. That's why Bitcoin particularly looks weak.
Yeah,
I think, I de-risked my crypto in early December. I was thinking, we probably do have a move down to 40K, maybe even lower. It never transpired. It's just been kind of languishing, going nowhere. Ethereum's price action is relatively bullish, and so I'm now taking the lead from that, and I'm starting to add those call switches, because whilst Bitcoin, until it breaks 53, 54, it doesn't really confirm that it wants to go higher. Ethereum, though, is now maybe signaling that actually it wants to go and it wants to rally in sympathy with other risk assets. And so the way to easily kind of not commit too much but get exposure to that scenario is to do those call switches. So that's what I'm doing. So I do favor this scenario that we rally still. It's just I'm waiting for Bitcoin to confirm it by breaking 54K. If Bitcoin confirms it, I might just buy my Bitcoin call back, right? But right now, it's an easy trade to sell the Bitcoin call and sell like something like the 60K area in Bitcoin, buy something like the 45, 4,800 area in Ethereum, let's say in March, February or March expiry. Those premiums aren't too different, okay? If we start to motor and Bitcoin smashes through 54 and the rally's on, just buy those Bitcoins back, right? But the point is, whilst that doesn't happen, let the Bitcoins fund the Ethereum call that you think's got more legs on it, basically, right? That's how I'm playing it. And you don't, because this thing, you don't need to commit. You can let the market guide you and guide your hand. This is exactly the trade I did in October 2020. A load of Ethereum calls versus Bitcoin calls, because I saw the same setup. I was like, crypto rally is due. Ethereum's going to have more beta. The vol spread's pretty mild. Let's do this. We started to rally, and Bitcoin actually led the rally in the first few weeks. I was like, oh shit, crypto adoption. People are only buying Bitcoin. They don't care about anything else. I need to be careful. So I just started buying back my Bitcoin. Start buying back a few Bitcoin calls. You don't have to buy them all back. Buy a quarter, a third. And then the more it rallies, buy some more. And the market will confirm to you what's happening, right? And then I let those Ethereum calls run, and I got very lucky. And it ended up being, multiples. But
this reminds me, you last when you were last on the program, you said you were putting on a treasury TLT call spread for very similar reasons, right? You wanted to make sure it carried well.
Exactly. Like you put on trades, you put on maybe longer dated trades because you think the move that you're looking for is going to happen by then. But you got to manage the carry, you got to manage the risk, and you can start with a spread and then end up with an outright because you bought back the short leg at some point, right? Either opportunistically because the thing has dropped, or just because as we've been rallying and grinding up, your conviction has been increasing. The price of that short option hasn't actually moved too dramatically against you because it's been a slow grind, and you can cover it basically. So that's what I've been doing with the TLTs. I put them on quite a while back. They looked quite good initially because we had that rally in TLT late in the year. And then we've now had a collapse over the last week. And I'm bidding a low ball bid to buy back the short strike if this continues over the next couple of weeks, because then I'll just be left with my front call, which is my way of having a bit of that deflation hedge on if we get that bond move towards the end of Q1, which I think probability is fairly high, right?
I think the probability is fairly high, but in the short term, transitioning to that the question, we got a question from Thomas Bonner. Says Imran and Darius, does a near-term rise in yields have legs, and if so, do you think this weighs on mega cap tech, tech than the indices? It seems like reflation might not equal indices higher. Probability that the rotation just burns the energy out, and that there's no new all-time high in the spot. So I'll start and say, yeah, certainly that's a possibility. Although I do believe that it's in terms of what we're seeing in the European bond market in particular, it is suggestive that the move in bond yields may have a little bit further to go. One chart I've been showing. Actually, let me share my screen. One chart. Not never mind. Oh, never mind. I actually can't share. I'll send it out. I'll tweet it out. But one chart I've been talking about, just sort of the thinking about the 61.8 fib retracement level on the 30-year. That somewhere around 2.20. That's when I would expect to see, kind of the. Oh, here we go. That's when this is right when I would expect to see, the sell off in bonds kind of fizzle out. I wrote about that this morning in terms of our crowding analysis. If you look at sort of skew in TLT and the volatility risk premium in TLT, it's starting to suggest that, hey, we're kind of long in the tooth in this correction. But the reality is we're not quite there yet in terms of where you want to be covering shorts to the extent you're short, or obviously kind of backing up the truck with both hands. And so you might see a double top in the 10-year. I'm less concerned about the 10-year. It's kind of not really where our fixed income exposures are focused. It's much more out on the duration side of things. But, in terms of this reflation trade, yeah, it looks like it could, kind of extend itself into the next several weeks, just in terms of the nascency of the signals that are the breakout in bond yields in Europe.
I echo that. Like I agree with the deflation narrative that we're building, but I also recognize that this could be a bit of a violent sort of break higher in rates, and we don't really know where that ends. So that's why I
Yeah.
like calls, to be honest. That's partly why I used call spreads as a way of topping up that trade
Mhm.
rather than just buying outright loads of TLT. Right?
Yeah,
Yeah.
absolutely. Get back to the queue here. Sorry. Um, John's asking you, Deribit is banned in the U.S. Are there any other exchange options available for U.S. investors?
Yeah, so FTX has taken over Ledger X, but apparently they are dragging their heels a bit at actually getting any better liquidity on there. You've got Delta Exchange, but I believe they've got US issues as well. They're in India. They offer like options on Solana and Avalanche and random altcoins as well. But I don't think US people can use them. So I think you're probably almost better off going towards the decentralized options protocols, right? And thinking about learning about them, seeing what type of strategies they offer. Because the the good thing about those is they will actually handle a lot of the trading side for you, right? So you stick your money in an options vault, and like I said, I haven't done too much work in figuring out what all these vaults offer, but they a simple call option overwriting strategy. I mean, you still have to roll that call every month or whatever, but if you stick it in a vault, I'm assuming they're doing that for you, and they're obviously taking a bit of money out of you to do that for you. But it might be nice to have a low maintenance trade that just enhances your yield and does what you want to do in options, and you don't have to worry about the deribit thing because it's all decentralized. Right?
Innovation.
Yeah.
Miguel's asking, I think he's referring to crypto. What is the probability you assess to this being the beginning of a longer term consolidation period, given the data shift to increasing deflationary pressure?
Do you want to answer that one? Or should I?
Yeah, I'll start. My favorite chart here. What slide is that? I got a brand new deck from yesterday, so I got to learn my own slide numbers. But as I pontificate, I think it's slide 109 in the deck. Slide 104. Sorry, here we go.
Oh yeah, I knew it was going to be that one.
It's my new favorite slide. It explains so much about the process in terms of just kind of putting a time series to everything we talk about in terms of regime segmentation, right? And this, these big decelerations in global growth, which we are certainly on the precipice of it, in terms of we know that we're going to decelerate a lot in terms of growth. That's not that's not up for debate in terms of the levels of GDP we're seeing in places like U.S., Europe, even in kind of beleaguered economies like Japan, et cetera. The reality is historically speaking, and again looking at the last three cycles, and I can pull this chart further back, and you see the same pattern. I just wanted to zoom in on the last three cycles to get crypto in here. You've seen a 30% correction in high beta stocks relative to low beta stocks every time. We've seen, kind of we've gone down the backside of the global growth sine curve, which is the blue line. The black line is the high beta, low beta ratio. And then the red line is the Bitcoin to treasury bond ratio. You've seen, 85%, decline, 85% decline and a 75% decline, kind of coinciding with, the peaking and rolling of the global growth cycle as well. So to me, the one thing I'll call out that kind of makes me nervous with respect to the broader risk appetite, because I'd certainly say we're pretty bullish, kind of, at least over the next, 2 to 3 months in terms of a lot of the signals we're getting from CACRI and from our convergence analysis, and certainly just the kind of the fundamental view on what Omicron means from a economic standpoint and also a risk appetite standpoint. But beyond that, I mean, we've seen this movie before where, Bitcoin kind of peaks out before we see the big drawdown in stocks. Obviously 2017 being the kind of the big one in particular. You saw it obviously in 2020 as well. So if you want a bear thesis, this is certainly the chart for you, slide 104 here, in terms of the consolidation. And again, we do believe it's coming, the big deflationary wave. We just don't think it's here yet.
Yeah, I would echo that, and I think there'll be real good money to make on the downside in crypto.
Mm-hmm.
That's the thing. Like once you get into options and you realize how to trade them, how to play these moves. I mean, they've smashed the vault, right? And and
Yeah.
and 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 the flows that are coming. are going to continue to supply more and more vol to the market, right?
Mhm.
The more sophisticated people get, the more institutions that come in and do call overwriting. That I mean, I was of the view that vol was going to work its way down over the course of the year, right, or over the course of the next few years. I think the structural level of crypto volatility, particularly medium term volatility, so let's call it 3 to 12 month volatility, is just going to get smashed, right? Is what happens, right, when an asset class becomes more mature, right? You're going to get more liquidity in the actual spot market, which is going to dampen moves. You're going to get more suppliers of volatility to do whatever they're doing, put underwriting, call overwriting, things like that. And the gamma part of the curve obviously will be related to what is actually going on. What is the realized vol? How much are we moving daily on a daily basis? That will get dragged up and down by realized, but the middle part of the curve is always more determined by supply and demand dynamics. And the reason it's been so inflated because there hasn't been enough supply, right? People want to own this stuff to participate in the upside in crypto, and there's just not enough sellers, right? That is about to change.
Broaden this out back to broader macro, looking at this chart here, I think that's probably one of the more important functions of why QE has worked so well to perpetuate asset price inflation over the last decade plus. This is something I talked about with Jim Carson in that River interview in terms of kind of the four levers, the four pillars with which monetary easing or monetary
Mhm.
tightening impacts the financial markets, and kind of what you just said in terms of the institutional supply of vol. Just really kind of a light bulb went off really for me just now, because if you think about what quantitative easing is a signal for, it's a signal that the Federal Reserve is going to maintain its zero interest rate policy for longer. And as long as the Federal Reserve is maintaining its zero interest rate policy for longer, the incentive for investors to go out there and sell vol as a yield enhancing strategy is higher. But then you think about the secondary impacts of what happens when vol gets compressed. You talk about very large institutional fund managers are using vol targeting as a proxy for their broader exposure to the asset class. And so it's both a behavioral dynamic in terms of what QE is, a signaling perspective, but there's also a technical dynamic in terms of investors compressing vol, withdrawing yield from that market, and ultimately that being both a realized and sort of behavioral signal to other investors to get longer of stocks.
But then also what it does is you get these overshoots, right? You get
Mhm.
the local vol in the middle, obviously it gets compressed,
Yeah,
the juicy stuff basically, and it's
yeah,
those out of the money tails that are just not worth selling, right? So
totally.
you get the, as your conversation with Jem, you get this leptokurtotic, I think is the word, right? Yeah, that's the surface. So in my world, or in my experience, we call that smile, right?
Yeah,
So you have the vol, you have the at the money vol, you have the skew, which is the puts relative to calls, and then you have the curvature, which is the smile, right? So what you tend to have in lower vol markets, as the vol's compressing and the at the money vol is going down, those wings stay relatively bid, and that smile goes up as at the money vol goes down. So
absolutely, man. So we'll leave it at there. I think that's the word of the day. That's the word of this discussion. It's leptokurtic, man. I think we could see some pretty explosive moves both to the upside, obviously within crypto, if we're right on this Omicron convergence trade analysis. Potentially having legs for a few months. But then you can also see some pretty explosive moves to the downside as the market really starts to deal with what it actually means to withdraw liquidity, what a faster deceleration in growth might imply, and ultimately, I go back to the starting point of a lot of people are on one side of the boat. We might be talking about short-term hodlers versus long-term hodlers and how much pain the short-term people are feeling. But the reality is the general investors way longer of Bitcoin than they have been at any point in time in the last few years at
mm.
this particular juncture. So that could potentially be a problem, not just for Bitcoin, but that what that implication is for broader risk appetite. So we'll have you back, man, in a few weeks, few months. But definitely, man, always a pleasure to catch up with you.
Oh, mate,
Anytime you're free, man, we'll definitely have you because you have so many valuable insights.
thank you so much for having me, mate. Take care.
And you said you actually had a
Oh.
you have a program coming out, right?
Yeah, I've got a boot camp coming up. For
Yeah.
those who want to, those who are interested to learn more about options and how to use them, and the practical aspects of options trading rather than the textbook theory. I've got a boot camp, 15th and 16th. It's the weekend. It's a weekend. I run these like once a quarter, basically. So that's a Zoom boot camp where you're live with me 6 hours a day over the weekend. You've got to give up one of your weekends, unfortunately, but you're going to get bombarded with a load of information about options and how to really use them, examples, the whole syllabus that I've created over the last few years since I've done this whole options insight business. And then you get access to me on Macro Insight, which is my subscriber service. You get a free month if you become a bootcamp person. You get a free month, and then you get insight from me every week about how I'm trading these markets and what I'm seeing.
I appreciate that, man. Thanks for the offer, man. Look forward to it. Hopefully, some folks out there definitely lift it. Like I said, I've learned a tremendous amount from you in just a few short months, and I definitely look forward to continuing this partnership, man.
And I learn from you as well, mate. So
Yeah, appreciate you,
appreciate that.
brother. Cheers,
Take care.
man. Thanks everyone for joining us. We'll catch you back here next Wednesday.
Thanks, guys.